Welcome back, traders. Welcome back to the channel. It's your boy Hassan, and I'm back again with another banger. I'm back again with another video of the Alchemist strategy. I told you guys this is not the usual Alchemist that you guys are used to. This is the refined, simpler, and easiest strategy of Alchemist that you can implement. Because I used to the Alchemist strategy, which is so complicated. Yes, you might get trades, and when you get trades of good precision and high risk to reward, but then if it is so complicated that it is hard for you to understand, then what is the main point of trading? Trading is supposed to be simple, clear, and straightforward, straight to the point that you can just look at what to do and then you do it and leave the rest to the market. Because either way, even if you do what, every strategy has its lowest points and it has when it is loses. Every strategy has when those market conditions that make it fail. So you want to trade the simplest strategy and get a good risk to reward in order for you to remain consistently profitable. If you go for more complex strategy and then at the end of the day you lose, then you'll be doing a disservice to yourself, because you would have gone through a hard time formulating that strategy, implementing it, and at the end of the day you lose. So you'd rather trade something that is simple. Even when you lose, you have not put a lot of efforts in it. So just make sure the risk to reward is significant. Okay, so now this Alchemist is made easy, very easy. A few steps, and if you implement them, you're good to go. Very, 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 very easy. Okay, so now let's proceed. We have this is AUDUSD and this is the weekly time frame. I told you I always focus on the weekly time frame because I'm a swing trader. I'm not the trader or a scalper. However, if you guys want a video about the lower time frames, you can request and I can be able to do it. So let's go straight to the chart. Oh, by the way, people who have not subscribed to the channel, guys, we have reached 600 subscribers in 3 days. Kindly, if you have not yet subscribed, we are now going for 700 subscribers. If you have not subscribed to the channel, kindly guys, subscribe to the channel. I always give out free content, free premium content, free of charge. So subscribe to the channel and be part of this growing trader of like-minded this growing community of like-minded traders. Guys, kindly subscribe to the channel. Also like the video if you'll find it useful. So straight away, let's go to the charts. So now what do you see? AUDSD, and this is the weekly time frame. Good. So now the first thing you see is, I told you there is a candlestick pattern called the evening star and morning star candlestick pattern. I think maybe in my next videos I should be able to show you this candlestick pattern, because I told you there are many, but they are those ones that you just have to pick out and then master. If you master them, you're going to be good to go. Before I even proceed, there is one here. You see this one, indecision candle, and then the next week's candle. If you marked this one very well like this, if you marked it very well like this, and then you drop to the daily time frame, let me show you how powerful these candlestick patterns can be. And that's why I like this strategy. It is straight to the point and well orchestrated. So you would refine this one to around this, around that one. I know someone would say why, because this is a 50% candle indicating the previous area of demand and supply. So when you drop down to the 4-hour, where is it guys? It is here. So when you drop down to the 4-hour, the market had already shifted to an uptrend. So the 4-hour, you would refine this to this one here, you see, like that. Very good supply zone, demand zone. This one would miss. Let me mark it well. Yeah, it would not miss. It would be a sniper. Yes, it would be a sniper. And look at the precision. This is now the good thing with Alchemist. I want you to look at the precision, guys. I saw this on the weekly, then executed in the 4-hour. Look, market was making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower equal low, and then turn to higher lows, higher high, higher low, higher high, higher low. higher high, higher low, higher high. Then market retrace. The moment it was retracing, you know it would take out this liquidity, buy from this area, and then we'll go up. But you saw it on the weekly time frame, meaning you saw it on the higher time frame. And look at the move from here up to here. You would hold this trade for around 4 weeks, and it would give you very high risk to reward. All with the Alchemist strategy. Simple, clear, to the point. So let's go back to our video. So now this is it. I told you I'll teach you the candlestick patterns. I'll get a video where I can teach you candlestick patterns, and then we have another one here, this engulfing candle, and then we waited for price to come back to the zone and then carry us to the upside. So I'll get a video, I'll teach you about candles. So now what do you see here? You see this candle dropping down, and then you see an indecision candle, but this is a bullish hammer, or a bullish, how do you call it, a hammer candle. Okay, and then an engulfing candle, engulfing both the hammer and this previous 50% candle, forming an evening star, a morning star candlestick pattern. So now what did you do? It is always simple, as I always tell you. Come here, mark your indecision candle that was engulfed. You can mark up to the wick to the bottom, but it is not necessary. So I think this one up to there it was okay, but you can mark up to down here. I thought the stop loss will be big, so you just have to mark up to there, go to the lower time frame and try to refine. So this is the weekly time frame you have marked, and let me put the line in this candle here. Which line would be better, because this one is taking the whole. Okay, let me put that line in this candle up here. Like you see, this is now the week ended from here with this engulfing candle, so we want to trade this next week. This is the candle we want to trade, so I just put a line to mark that candle. Okay, so now after marking this indecision candle, we go down to the daily. Remember, the week has not yet started, and now when immediately, and this is what I'm telling you guys, immediately you go to the daily, what do you see? What do you see, guys? This is where the Alchemist comes in handy, because it's going to give you precision where to enter from, the direction of the market. You enter the market when you're confident that this trade is going to work out, or it is likely to work out. So where do you see a demand zone? Very simple. The demand zone is in this area here. You can see it, and this is the daily zone. This is the daily zone, which means we can even go to the 4-hour and refine it more. This is the daily zone. You see the demand zone. So now what do we do? After marking the daily, we do go down more to the 4-hour to make sure we get the those tighter stop losses that we can get. So this one would be refined up to this daily candle here, this 4-hour candle here. Mark both of these candles, because if you mark only this, price is unlikely to drop up to the lowest. It is likely to drop up to here. And if you look at this area very well, you will see a QM pattern. A QM pattern. A QM pattern is where you see a low, a high, a lower low, and then a higher high. So price is likely to guys, I don't know what to tell you. I told you I'm going to teach you trading by force, and you guys will become profitable by force. I want you to become profitable by force, such that you just refuse to trade, but when you know what to do. So now we have a weekly telling us that we are going to retest. We are going to retest in that zone. Then the daily shows us a demand zone of a really best rally in that area. Now in that same area, you come to the 4-hour and see a QM pattern, a low, a high, a lower low, a higher high. Just go to line chart, it is going to be clear. This is a low, a high, a lower low, and a higher high. QM pattern on the 4-hour time frame, meaning that price is likely to come and react from this zone if it is going to buy higher. So what do? You're going to put your entries here. You're going to put your entries here, like that, and then stop loss is slightly below. So I think your stop loss would be around 25 pips there, and then your target should be, first level target is 1:2. Up there, this one is 1:3. You stretch it 1:3, clear, because you know the market is going to give you a higher high. So 1:3 should be okay. 75 clean pips. And now I want you to see the precision of the entry. Price came, tapped you in with just a week. A week immediately tapped you in, it started going up. Within a few hours, price had given you 75 pips. Profit, guys. Profit. And now, there's only one thing that you have to know. This is a high probability trade. Why is it a high probability trade? Because it emanates from the high time frame, and not just a mere high time frame, a weekly time frame, guys. Weekly time frame. You see a weekly time frame giving us direction to the upside because there was a rejection from the downside. Then the daily giving us a demand zone, a clear demand zone, rally base, rally demand zone. And when you come to the 4 hour, the 4 hour is giving you a QM pattern in that demand zone, which is a low, a high, a lower low, and then a higher high. So that means price is likely, at least that trade, you are 100%, okay, not 100%, that is overrated. You are at least 90% sure that this is where price is going to react from. Price can decide to do other things, that is none of your business, but you are 90% sure. And now there is also another thing. If I stretch, you see, trading is all about trying to gather as many confluences as you can in order to gain confidence in your trade. The more confluences you have in your direction, the higher the probability of that trade. So now, if I stretch this zone to this side, you're going to see a head and shoulder. People who trade chart patterns. This is a head and shoulder on the 4 hour. This is a shoulder, this is a shoulder left, and then a head, and this is a right shoulder. So price was coming to retest on the right shoulder. If I put the line chart, you're going to see this clear, guys. That is a head and shoulder. So you have, with this Alchemist strategy, you have put different confluences together to form your trading idea. And all those confluences are telling you we are buying, we are buying, we are buying. You have like 4 different, now people who trade chart patterns, this is a head and shoulder. It is telling you that it is a buy. Good. People who trade support and resistance, there's a resistance support area here. This is a tap, a tap, a tap. So price is coming back to the support area. We are likely to buy. It is telling you a buy. People who trade demand and supply, there's a demand zone here. It is telling you we are going to buy. People who trade Alchemist, now for us who trade Alchemist, we put a lot of things together, because my Alchemist is top-down analysis with demand and supply. So I have put all that together. It is telling me it is a buy at that level. Why wouldn't I buy from there? Now the only issue I see with this trade would be the demand zone. Most people would consider only this week at the bottom, this one here, this candle at the bottom. They will consider that candle at the bottom, and they are going to miss out on this trade. And catch me right, it doesn't mean that now this zone is not valid. It is valid. However, this one, if you accommodated it, you would get the trade early. Now that you have hit your 1:3 and price is retracing, price is likely to come back again and test this demand zone because it did not reach that area. And now the good thing about this is that the risk reward is only 15 pips. So you can mark that area. Price can come to use this as trend line liquidity, tap into this area and even go higher. So we have to wait for price action to come to this area and also take us higher. But the good thing is that you would have gotten already 75 pips from here. So out of those 75, you'd remove the 15 pips that you're going to risk here. Remove the 15 pips and risk them here. From 75 minus 15, you're going to get 60. So you'll have a profit of 60, and then the rest of the 15 pips, you risk them here. You have nothing to lose. You're already in profit. So I think you guys have learned something. That is all with today's Alchemist. Trading doesn't have to be that hard. you have to make it as simple as you can. When you make it simple, it is going to be easier for you to replicate the same strategy over and over again on different assets over a long period of time. That is how you become a consistent, profitable trader, because you're doing the same thing over and over again. But if you cannot implement this strategy over and over again, then it is not going to be a good strategy for you, because it is not something you can rely on. So I've simplified this, made it simple and clear for you guys, so you can replicate it in your trading. That is all, guys. If you have not subscribed to the channel, guys, kindly subscribe to the channel. We are on the road now to 700 subscribers. So subscribe and be part of this growing community of traders. The moment we hit 1,000 subscribers, I'm going to give you guys a Telegram channel for free signals. 1,000 subscribers, I'm giving you guys a Telegram channel for free signals. So kindly make sure you subscribe. When we get there, I'm going to be giving you a channel for free signals, and guys, I'm going to be giving you free premium signals. So it will be upon you to utilize them. So that is all for today. I wish you a great day, and also if you learned something in the video, kindly like the video. Okay, so bye for now.